Whew. Good morning, Mr. Tarun. 69 is such a number I got late. 69 is such a number. I thought I should let this show go today. I was this close to just canceling the show today because it was difficult because of the 69th show. It seemed like it's gonna be a difficult play. But then I thought leaving the show on the 69th episode or taking a rest on the 69th episode would be quite a blunder, right? It would be a symbolic blunder. So I was like, let's do it. Let's do it. But yeah, I was thinking about the same thing. 69th. Just 1 second, I'll set everything up. WhatsApp is done. There you go. Done. Done. I was not feeling well today, unfortunately. And I was like, man, will I have to cancel the show? The problem is, if you cancel the show once, it sets a precedent. Then you can keep canceling the show. The whole aspect of regularity is an extremely fragile play, right? If you're regular, or if your goal is to be regular, if your goal is to be, uh, you know, consistent, you've got to be consistent. Otherwise, it's just a slippery slope, right? You cancel once, you cancel twice, and then it becomes a daily habit. So that was the play. Actually, Mr. Tarun, it wasn't the monsoon. I was fine. I had something wrong with the bike yesterday. So I just used the bike, and then it had some trouble, so I got to, get it repaired and so on and so forth. So it was a difficult day that way, and had to work very late, till very late. Like, so difficult days at work, a lot of work, which, you know, which led to difficulties in the morning. But here we are. Mr. Rajveer Singh says, if your goal is to be an apex, you've got to be consistent. Let's begin then. I hope you can hear me. I am sure you can hear me. And with that, let's get to the show that we deserve. The show that we deserve. We deserve it. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not every other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go. But before we go, you got to follow a tradition, right? You know the tradition? The sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does. As it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice or stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. Today I'm having water with hot pepper in it. Sorry, black pepper in it. And here we go. Beautiful. Sublime. A lot of fumbling and mumbling and dumbling. But now we begin. Men may come and men may go, but I go on forever. And then there's an X-rated version of this. Men may come and men may go, but I go on till I come. Right? And that is the number 69. Uh, Trump piles a heavy levy on India, no questioning. New tariff effects 40 billion of exports, but no compromise in dairy and agri by New Delhi. Now, the moves on India by US are starting to show some results. And what we talked about, our reading of the situation, which was not as clear to everybody until now, has been clarified by Senator Marco Rubio. He has said that India and US have had a very good relationship. However, India buys a lot of Russian oil, which is unfortunately aiding Russians' efforts of war, which doesn't sit well with what US is trying to do as far as bringing the war to an end is considered. So that's what we've been talking about. That's what we've been stating as the goal of this. This wasn't an attack on India. This isn't attack on India. It's essentially an attack on Russia, with India as the proxy, as the trade proxy. So here's the statement by Mr. Marco Rubio. India has huge energy needs, including oil, coal, and gas, which it must purchase to power its economy like any other country. It buys from Russia because Russian oil is sanctioned, cheap, and sold below global prices due to those sanctions. Unfortunately, this is helping to sustain Russia's war effort. And this is exactly what it's all about. We talked about this very, very deeply. And the moment this happened, we had this reading of the situation. But this is not exactly an attack on India. It's an attack on Russia. The problem is US has exercised all its arm twists and all its moves against Russia that has been exhausted. The tariffs, the sanctions, the kicking out of Russia from the SWIFT payment system, seizing of properties and assets of its oligarchs. It's been a very long and arduous journey, but a long road to nowhere. You know? So that didn't work out. That didn't work out. Because Russia turned out to be way, way stronger than anticipated by US. And the strength of Russia essentially relied on just two people, right? One was China and one was India. China is the biggest importer of Russian energy right now. India is the second largest. And these two countries effectively cushioned whatever losses Russia could have sustained, or let's say could have borne the brunt of, right? And when China and India sustained losses, US had no option but to look at India next. Why? Because China is already sanctioned to the T, right? China is already engaged in a full-blown trade war because US realizes that China is the real adversary, not Russia, not India, nobody. China is the real adversary. However, this particular administration stands on Russia. Now, this particular US administration, that is the right wing administration, they didn't have or they didn't want a fight with Russia. You realize this? In 2016, when Trump administration was there were no conflicts against Russia. There was nothing against Russia. All the efforts were on China. These people didn't want the Russian war. But they inherited a Russian war from the Democrat administration, right? Now, be it Democrat or Republican, a US problem is a US government problem, right? So they had to deal with this situation. Now they tried everything to make Russia stop the war, but their previous administration had already engaged in a very serious way and caused a lot of harm to Russia. And since it didn't really cause damage and Russia could sustain itself, Russia was in no mood to negotiate. Now, because of that, what happened was that this administration got pulled into it. Now, they tried the peacekeeping effects, they tried stopping the money supply to Ukraine, and so on and so forth, but none of that worked. And that this is the last straw. Now, the fight with India is essentially a move to pressurize Russia to stop the essentially war against Ukraine, and let's see how that pans out. So this is the Kobayashi Maru situation, which US administration is trying. It's just trying its best to stop Russia from the war. Now, will it lead to an outcome? Will it lead to an outcome? Now, yesterday, viewers of Thinkers Frequency would remember we talked about how uh, it had become a problem. Like Indian oil refineries, IOC, and so on and so forth. These guys had stopped buying Russian oil from the spot market. So that was one move. Now Nayara, the Rosneft and Reliance company, it's facing problems in exporting its Russian oil. Uh, so it's looking at the import market, the domestic market in India for selling whatever it refines. So these things are starting to cause problems. But how much will they affect Russia in absolute terms? And will that pressure point be enough for Russia to actually change its ways? Is the $1 trillion question, or let's say the $4.2 trillion question, or let's say even the $20 trillion question, right? Because that is the problem. What happens if Russia doesn't cave? If India's uh, pressure points don't really make Russia move the needle, right? In that case, it'll just become a new conflict for US, which is the India conflict, and a new conflict for India, which will be the US conflict. So this is a very developing and complicated story. My hunch is that Russia might just be looking at closing things down in some way or the other. So it might just be looking at taking the off ramp. It already has 20% of Ukraine. It might just go a little further and then take it out. And when that happens, it'll all subside, because it's been an ongoing affair for Russia. It's not been a bad affair, it's been a good, rather, okay affair. So their their agenda of continuing this conflict doesn't make sense for too long. So that's the reading of the situation. Meanwhile, India is also retaliating. There was news not verified by me, I can't say, that India is not looking at buying the F-35s anymore. Well, I haven't verified that particular news. It could be just media garbage, but India is not looking at relenting down anyway. So you know maybe you never know what happens, but this is what it seems like at the moment. Moving on. Early Diwali, uh, you know, shop floor to see suit early Diwali at M&M. Give big gains. Possible first across board grant of 450 crore ESOP to 14,000 staffers. The festive season. Before we begin with the story, Mr. Rajakumar has a comment. What a start to episode 69. Already some punchlines and a few motivational lines. Great number indeed. Indeed. Special number. We're supposed to not have this, but here we are. So, the Diwali season, the consumption story season is on this month. It's 2nd of August today. We're going to begin with everything. We're going to begin with the festive season. We're going to begin with Raksha Bandhan. We're going to begin with all the consumption related, stories. But as it happens, ITC's number came out, and ITC's numbers were not bad at all. So ITC has pretty good numbers. The revenue rose, the net profit slightly declined, but the revenue rose by a lot. And it was not just cigarette revenue; it was actually the consumer goods revenue. So ITC is a big conglomerate. Viewers of Thinkers Frequency know Indian Tobacco Company. It manufactures of course, it manufactures cigarettes. It's the largest cigarette player in the country, but it also has Yippee Noodles, the Sunfeast, Classmate, the stationery business, and so on and so forth. So it has all of those things, and except for the Classmate, the stationery business, the FMCG story of ITC looked good in the last quarter, which is great news. So can we say that because HUL's reports came out yesterday, they were not bad, they were good. ITC's reports came out, they were good. Imami was all right. Uh, I haven't read Marico's report. More by and large, uh, it's not bad. The FMCG story doesn't look that bad. So, can we say that the consumption story is gonna finally look at a turnaround? Because this was the last quarter, right? April, May, June. Now, if April, May, June could show some estimated growth, and with this July, August, September, which is going to be a very crucial quarter, this and the next quarter happening, can we say that Indian consumption story is back? Right? That is a very, very good question to ask, because this is going to have serious ramifications and upward trajectory. So Mr. Tarun says RBI rate cut is really helping in this. Now RBI rate cut will help in this. So this was pre-rate cut. Rate cut probably happened in July, the first week of July or the second week of July. That's when the rate cut was announced, right? So the rate cut hasn't really hit as of now. It hasn't hit per se at this moment of time. So what you ought to be looking at is how it affects. So maybe it would, even if it hit, let's say June, I guess late June, the rate cuts effect have not yet hit the last quarter. This is the quarter before the rate cut. Rate cut should lead to even better results in the next quarter. So that's what we are looking at, which means that's great news, and it's gonna be awesome, right? Might just be awesome. 1 second, folks, just 1 second. Apologies for that, folks. Apologies for that. Had to fix some noise related problems. Uh, so, yeah, Mr. Tarun, this is the pre rate cut buzz. This is just the economy, right? Let's see what happens now. Speaking of the economy, after 2 months slide, auto industry steadies for festive jumpstart. Wholesale volumes up 1%. So the car companies, the biggest indicator of consumption power is the automotive sales, as we have discussed in depth at viewers of at Thinkers Frequency a lot. Viewers of Thinkers Frequency would remember. We've discussed this a lot. So retail is flat, but the domestic passenger vehicle sales increased about 1% in July, marking a slight recovery after 2 consecutive months of decline amidst persistently sluggish consumer demand. So these companies are essentially looking at slightly better results as far as this particular season is considered, right? So a lot rests, Indian economy, a lot rests on what happens in this particular next 2 quarters, this particular quarter. The first one is April, May, June, then July, August, September. This is the crucial quarter, and October, November, December. So these two are festive season months, and they are going to decide what happens with the economy. So here's a roundup of all the positives that we've heard as of now. The positives that we've heard is that there's a lot of added temp hiring. There's going to be a lot of temp hiring happening. That we've heard that, right? We've heard that these car companies are looking at ramping it up, 1% up as far as the wholesale sales are considered. Uh, FMCG companies have already begun improving their earnings after some lackadaisical quarters, many lackadaisical quarters. ITC's revenue up 20%, FMCG agri, and HUL not bad, Imami not bad, and so on and so forth. Then we had some tepid months as far as consumer electronics is considered, consumer durables are considered, right? We had some tepid months. Now, what happens when there are continued tepid months for an industry? The purchases are bulked up as far as the festive season is considered. So you can see something happening there. So a lot of signs that are positive. What are the negative signs? The negative signs is that banking is not essentially looking that green. Lending is not really high at this moment. Banking is low. The IT industry is struggling. IT industry is the fuel for a lot of consumption in this country, of course, because of millions of people that are directly and indirectly engaged. Those are the two bad news that's coming around, right? Now, the banking news has been fixed to an extent by the RBI's rate cuts, which are going to kick in, which have already started kicking in, but they're going to kick in even more. So, by and large, if you weight on a scale, things are more positive than negative for the Indian economy in the times to come. So you can expect something good to be happening as far as this festive play is considered. Speaking of something good, Figma, a company, has debuted on the bourses, the US stock bourses. Now, the company really had a killing at the stock market. Like, really had a super killing, right? It was supposed to be listed, it raised 1 billion, and then the stock went up to 300% up. 300% up. So, 33% up, $33 was the IPO price, which went up to $126. So, market value, like this particular thing gave it a market cap of $61 billion and effectively $73 billion if you count ESOPs and everything, that sort. So $73 billion for a company called Figma. Figma is a design tool. We all use it. Most of us are here in the software industry. So we use it. The startup guys, we know Figma. And, Figma was going to get acquired by Adobe. So if you know, Adobe has a very, very big design tool, environment, Photoshop, Premiere Pro, and so on and so forth. Not Logic. No, it's not Logic, right? Premiere Pro. So Adobe has a huge suite of these tools, and Adobe wanted to buy Figma. So Adobe wanted to acquire Figma for $20 billion. So that was the price at which Adobe was looking at acquiring Figma. But that deal couldn't go through because of regulatory crossfire. Something about an anti-competitive thing. That blocked that deal for Adobe. And Adobe had to pay a breakup fee of $1 billion to Figma. So Figma got $1 billion from Adobe for a failed acquisition bid. And then when it debuted, it's now a $73 billion company, right? Bad news for Adobe, of course. Very bad news. Speaking of bad news for Adobe, there's another bad news which will be coming to Adobe anytime soon, sometime soon. Can you guess which company is the company which is going to give Adobe a similar news, just as what Figma has given? Can you guess that? We're all startup guys here. We are all from the entrepreneurial background, from the software industry. You all use that tool, right? We know about that. Guess. It starts with C. Canva. Tarun, Mr. Tarun, you're right. Canva is a huge company. Last I checked, Canva was valued at $60 billion in a private market. One second. Canva valuation $32 billion. $32 billion is the worth of Canva right now, and it's still a private company. It's not debuted, and it makes a lot of money. Canva is a very profit. Figma as well. Figma made a profit of, let's say, $44 million at a value, uh, at a revenue of. Let me share something. The revenue is, yeah, revenue growth in 2024, net loss. Okay, Figma had an income of 44.9 million and revenue of 228 million in the first 3 months. So 44.9 and 238. So it's essentially 228, 250 times 4. It's essentially a $1 billion company by revenues, almost, at a net income of 200 million. So margins are nice. But it made some losses last year. Figma had an income, it revenue growth in 2024, though rising operating expenses contributed to a loss of 732 million for the year last year. Now it's swung into profits. So maybe, not sure. So it's essentially looking at right now a 70x revenue multiple. That's huge. That's huge, right? 70x revenue multiple. Pretty uh, well valued, let's say. But the company has extraordinary prospects right now, and it's pretty much in a green zone. But yeah, the valuation will tip down to, if it's 70 right now, $60 billion, or 70 right now, $60 billion. It's gonna be coming down to, let's say, 40 after a few days, or 50, and that's where it starts growing again. So but Canva is a $32 billion company, and $32 billion company, it's not yet gone public. When it goes public, Adobe will have a two-front war. Now, Adobe has been in a very green kind of a situation as far as its design suite is considered, and these companies, Figma and Canva, both have been very new players in that market. So, bad news for Adobe. Moving on. GST mop-up resists geopolitical turmoil, climbs 7.5% in July. So GST is showing no signs of, uh, let's say, decrease, or let's say decline, or so on and so forth. It says, uh, and just a few days ago, we viewers of Thinkers Frequency would know that the government said, the Fin Ministry said, that GST should be considered as an indicator of economy, because we are tracking the real economic momentum, right? The transaction momentum. And we discussed how that is not entirely true. Yes, of course, GST tracks a lot of formal economy momentum or formal economy movement. However, it's considering it an a holistic indicator of the economy would be a mistake. But here's the spiel that GST mop-up resists geopolitical turmoil. Sender is looking at offloading disinvestments in IDBI Bank. IDBI Bank is held about 45% from the government and 45% by LIC. Now the rescue efforts have happened, and it's gonna be divested. Some earnings for the government. A lot of people think that, oh, government disinvestment is a bad news, right? When you look at social media, it says सरकार companies बेच रही है, सरकार companies बेच रही है. That's a very bad way of looking at things. Government has no business doing business. Government disinvestment should always be looked at in a private and a positive light. So companies getting disinvested, at least, companies like IDBI is obviously a very good news, because Indian government has a serious presence in the whole banking industry. Moving on, talked about Figma. you've got to appreciate the maturity with which India is handling the whole US situation. Uh, you know, India has been at a thorn in the whole US Russia situation, but the way it's been handling this particular game, the maturity, it's still saying we are the ties are deep. It's $100 billion collaboration. Yes, it wouldn't lead to a lot of losses. The worst case scenario for India is a 0.2% GDP decline. It's saying, the country and the analysts are saying the worst case scenario for India is a 0.2% GDP decline, right? Because a very big part of Indian exports to US is not going to get affected. So if it doesn't get affected, we are fine. We are fine, says US. However, uh, you know, the way that these people have been dealing with the whole situation, because they've been playing very very tricky, right? They've been buying Russian oil, they've been signing deals with US, they've been trying to gain from all angles, and now it's come down, come crashing or come closing in for India. The restraint is remarkable. Another good signal is that factory activity for the Indian economy is at a 16-month high. Factory activity, PMI at 59.1. Sales rise fastest paced in nearly 5 years, propel production growth. Now, PMI, how do you read PMI? A lot of people don't know how to read PMI. They don't understand what like 59%, 59.1, what does it mean? Right now, viewers of Thinkers Frequency would remember, number above 50 means expansion, number below 50 means contraction. That's what a PMI signifies. So whenever you read PMI and it says 59.6, that means an expansion is happening, and a very good expansion is happening. So if you look at the similar numbers for China, you'll be looking at 49.7, 49.1, 49.2, 49.8, and so on and so forth. Which means that China is the industrial production, the factory output is slightly declining. It's contracting. So at this moment we are at 59.1, yet another signal of something good that could be happening in the country economically, for the domestic market, right? Auto companies to meet PLI goals a year earlier. Auto companies had a PLI scheme, so you would remember how we had PLIs for electronics, we had PLI for solar, we had PLI for auto, right? PLI is production linked incentive scheme. We've discussed this a lot. Viewers of Thinkers Frequency would remember. We've discussed this. And auto companies have effectively met their PLI incentives a year earlier, which means their production is intact, which is great news, right? The central government expects beneficiaries of the PLI in auto to achieve targets and exhaust the scheme funds a fourth year itself. The 25,000 budget outlay laid in 2021 is fulfilled in 4 years. So they had laid a 25,000 crore, you know, incentives. Now they have been met already. Speaking of auto industry, Volvo is looking at a U-turn in India on its electric only plan. So when electric was buzzing a lot, and every company was seeing that they might just come back, or they might just change to an only electric future, right? So if you remember, viewers of Thinkers Frequency would remember, the overall auto car market isn't rising at all, right? But the electric car market is rising. At this moment, electric car market is at 2.2% or 4.4%, but it's grown like almost double, right? From 2.2 to 4%. Electric, the shares of the market share of electric cars in the Indian automotive sector has grown. So there's a lot of growth as far as Indian automotive electric play is considered. However, it's still a very small base, right? 2% of the whole market, 4% of the whole market. It's a very small base. So Volvo, until a few days ago, was contemplating on a strategy of going EV only in India. It's backed out of that strategy. It's gonna go with IC engines plus EV, because uh, it makes more sense. Why does it make more sense? Because Indian automotive sector is not just looking at EV, it's looking at hybrids, it's looking at alternative fuels like CNG, it's looking at blended ethanol. Now, viewers of Thinkers Frequency would remember how carefully and how in depth we dissected Mr. Nitin Gadkari's interview a few weeks ago. Was it a week ago or was it a few days ago? But we really read that interview in depth. You remember that, viewers of Thinkers Frequency? How we went deep into what Mr. Nitin Gadkari had to say as far as strategy for the Indian automotive market is considered, right? He was talking about giving a real solid boost to the blended ethanol play. Do you remember that? Right now, the blended ethanol play is at 20%. He said we want to bring it up to 27%, because why it hasn't grown up to 27% is because there's a GST problem. We're going to fix that. We're going to bring the GST down for the 27% blended ethanol as well. Now we're going to incentivize ethanol, because why do we have to incentivize ethanol? Because India is a crude importing country, and we've got to stop this import of crude, because it eats up our forex. It brings our imports up. It leads us with deficits and so on and so forth. So the way to decrease crude import is by increasing blended ethanol, because a lot of crude, but a lot of oil that we have to buy goes into the automotive sector, the petrol and the diesel and stuff. So blended ethanol was his pitch, and look what happened. So everything is connected. If you follow the story in depth, you can predict these things. And that's what we do at Thinkers Frequency. We follow stories very, very carefully. So when we had read that Mr. Nitin Gadkari's piece, you remember what we talked about, don't you? Right? I'd like to see some comments there. How in-depth was our discussion as far as the whole blended ethanol play is considered, right? And that has manifested in Volvo changing its strategy, as always happens. So you can see this coming. Energy storage to hit high record. States tender 8.1 gigawatt capacity in July. Energy storage, government should incentivize corn production, if not yet. So they have, Mr. Tarun, that's what the whole blended ethanol play was considered, right? That's what Mr. Nitin Gadkari's spiel was, that we are gonna, the share of agriculture in Indian GDP is what? So he misquoted. He said it was 12%, if I remember correctly. But I said that we need to give it a fact check. It's actually 18%, right? And he said from 12% we're going to grow it up to 24%. And we said the right way to say it would be we're going to grow it from 18% to 24%. So he wants to increase the agricultural share of GDP by incentivizing agriculture, produce to be used in the energy space. So that's what it is. Biofuel is a huge industry which he wants to spur. So he's been talking about this for 11 years. And right now we are at 20% blended ethanol. His goal is to go 100% ethanol. And all it would require is for the auto companies to tweak their engines as per ethanol, right? And then we'll, as per Mr. Nitin Gadkari's dream is considered, we'll be import free. So that's the plan. Very good plan, great plan. Never know how much of it's gonna work out, but a good dream to have, right? Volvo Cars takes a U-turn on EV only plan for India market to roll out electrics while continuing to launch fossil fuel vehicles. Moving on, Tata Power profit up 6%. Adani Power net profit dips, and 1-5 share split. That is happening. Aviation fuel to go pricier, LPG to cost less. Aviation fuel to go pricier, which means bad news for companies like Indigo in the short term. even if Indigo sustains its position as the de facto indicator of the airline industry, the other airlines will definitely be in trouble, right? UPI transactions are rebounding in July after June decline. 19.4 billion transactions from up from 18.4 in June. So UPI transactions are also rebounding. What does it say about the domestic consumption place considered? Do you see the sense here? Uh, you know, Yet another indicator for something brewing as far as the Indian markets are considered, right? Now, not all is well, of course. As the textile, so we were very excited. Viewers of Thinkers Frequency would remember we were very happy that Indian textile exports will be having a tariff advantage over Bangladesh, right? That's what we were looking at. We were looking at India getting a favorable textile, treatment. Now we got that as far as the UK FTA is considered. We were very happy because now UK FTA allowed Indian exports of textiles to be much better priced than Bangladeshi exports. Bangladesh had higher duties, India had none. So we were very excited and we were looking at something like that to be happening in the EU zone as well, which is underway. But US exports of textiles will be looking at a decline now because Bangladesh and US and Bangladesh and India and US have an unfavorable, tariff situation. So these people are bummed out, in a bind. Margins are very low. US buyers are deferring Indian orders. 4.5 billion worth of textile apparel bought by US from India in January to May. So from January to May, $4.5 billion. That means about $10 billion of textile exports happened from India to US, which are not gonna be that green anymore. So that is a bit of a trouble. However, before these tariffs hit, don't you expect front loading to happen? Right? Or have they hit already? If they've hit already, which I guess they have, like August 1, right? Yeah, they've hit already. If they've hit already, there's not going to be any front loading. And if we knew about that, we would have seen all these companies being very happy in the short term. Speaking of happiness, Delivery has posted a profit. Q1 net up 68% at 91 crores. Delivery is the new age delivery company. It had a very, very good run recently. You know why? Viewers of Thinkers Frequency remember why, right? Why did Delivery get lucky recently? We've talked about this. Let's revise that. Let's revise what we've talked about. You remember, guys? Something about the competitor imploding? You remember? No? Oh, there's a delay. There's always a delay. I forget. There's slight latency. So I'm sure the answers are gonna come anytime soon. Ecom Express. Mr. Jindal, you're so right. Mr. Jindal gets an award. Ecom Express. So Ecom Express was a very good competitor to Delivery. Many people were very happy with Ecom Express. Its rates were very competitive. It was half the size and was going to have $1 billion IPO, by the way. The company by itself was going to have $1 billion IPO. But that didn't work out. Why? Because the founders, one of the founders, they died. They essentially just passed away. And when they passed away, the company got in dire straits. When the company got in dire straits, Delivery acquired the company in a fire sale for just 1,200 crore rupees. So there they were, that company was looking at going public at a huge valuation, $1 billion valuation, and it would have been another star company in the delivery space. But then the founders died, and delivery got the free run. Essentially, they acquired it in a fire sale for pennies on the dollar. So the best thing that can happen to you as a business is that your competitors implode, and that's exactly what happened with delivery. Moving on, there's a lot of action happening as far as the border is considered. I mean, the Russian play. US has deployed two nuclear submarines near Russia. Ex-president of US Medvedev threatened, said these ultimatums are not going to work well with Russia. We have nuclear powers. So what this guy, Mr. Trump, essentially did was he placed his two nuclear submarines, near Russian waters. He's like, I want to make sure that his words, which were pathetic, are not just words. So here we are prepared. A lot of flexing, muscle flexing. Speaking of muscle flexing, Donald Trump, Mr. Trump, has said that the Fed board should assume control because, and I quote, Jeremy Too Late Powell, a stubborn moron, must substantially lower interest rates if he continues to ignore this and that. So viewers of Thinkers Frequency would remember we talked about how Mr. Trump really wanted the rates to come down, the interest rates. So something good can happen to the economy growth wise, just like it happened in India, just like it happened in Russia, just like it's gonna happen soon in Europe, and so on and so forth. So he was hoping that this person, Jeremy Powell, would reduce rates, but he said that I'm not gonna reduce rates because we're going to look at it non-politically. Now, many people allege that this itself is political. Jeremy Powell is playing the political game. However, US jobs data came out, and it doesn't look that good. So earlier, the jobs data came out and said that US added some 2.5 lakh jobs. Now that data got recalibrated, let's say, updated, and it says they only added like 30,000 jobs or something, 25,000. So that essentially kills the narrative, right? So Mr. Trump said that jobs data head should be out. The person who's collating this data is a Democrat ally. So he's fighting a two-front war. US numbers were tight, right? The inflation numbers were tight. The jobless claims numbers were tight. Suddenly this news is a bit of a dampener, but US numbers were tight, and all what Mr. Trump was hoping for was a rate cut so that lending spearheads the next phase of growth. But apparently that's not happening, not anytime soon. So Mr. Jeremy Powell, till the time he's at the seat of the Fed chief, it's gonna be bad news for Mr. Trump, right? All he has to do is hold the economy till then. Mr. Tarun says, I come across an interesting stat on jobs yesterday. It said that direct job loss reported to AI is 20K, but actually 300 to 500K. Well, Mr. Tarun, you cannot estimate that. That's the problem with these numbers. These are very hard to estimate kind of numbers, right? What can you do about these numbers? Let's say a company is losing money, okay, and it wants to fire people, right? What do you think will it say? That, hey, I'm firing people because I'm losing money, number one, or I'm firing people because I found this new technology which is going to bring a lot of efficiency into the fore. What do you think is going to be a narrative of a publicly listed company who's in a tough spot, right? It's obviously not going to be the former, right? They're not going to admit that they're going to shit, right? So they're going to say that we have found a new technology, we're going to be more effective, more productive, and that's why we're going to trim the fat, right? That's going to be looking good to the market, stock market. So a lot of non-AI job losses are also going to be listed in the AI job losses. So that number is hard to quantize. And that's the alibi these AI companies have, right? That's the primary alibi that these AI companies have. Now we don't know how much of it is because of us. Maybe they're struggling by themselves, right? So you don't know, is my point. The stat is dicey. Apple clocks fastest quarterly revenue. Apple's earnings were out. So Apple showed good earnings. Revenue rose 9.6% to 94 billion in the third fiscal quarter. So Apple is showed a good revenue growth in the owing to the China market uplift. So that's good news for Apple. US markets have been killing it, right? First was Nvidia, it crossed 4 trillion market cap. Then came Microsoft, it also crossed 4 trillion market cap, stellar earnings. And now there's Apple. Uh, let's look at how stock markets respond to Apple's good growth. Uh, the the sad part amongst with the Apple story is the lack of AI play, because people, that's the rage right now, that's the paradigm shift, and Apple doesn't have a lot to speak for it, which is going to be a bit of problem. Speaking of AI and speaking of whatever is happening in the listed companies, Mr. Elon Musk says that Tesla has a chance to be a $20 trillion company when it launches its humanoid robots and the self-driving car. $20 trillion company. Do you believe him? Do you believe that's possible? Right? I believe him. Never bet against Elon Musk. Speaking of betting against the short sellers, Jane Street probe has hit a roadblock. So the company was asked by the tax officials to give access to the servers and books of the offshore entities. Now we've discussed this a lot. The offshore entities were the profit-making entities. Their trades were the profit-making trades, right? Essentially the Indian books, they didn't mean anything. Now Jane Street said that it's gonna comply with whatever they are doing, what all the you know uh, investigations are considered of SEBI, but they've refused to give the books of their offshore entities, the Singaporean, and there was another one, right? Was it Mauritian? Yeah, maybe. So Hong Kong and Singaporean. So they've refused to give that. Obviously, nobody is surprised. Nobody should be surprised with this particular play. So that Jane Street play is still in trouble. Uh, CCI has not decided to not probe Google against a plaint uh, by ADIF. ADIF is Alliance of Digital India Foundation. These are the Indian companies, the association of them, which accuses Google for anti-competitive practices in online advertising. So there was another suit. One was a Google Play suit, which they lost. Google lost, right? But now it's going to the Supreme Court. So CCI said pay 1,000 crores and change the ways. Then they went to NCLAT, the appellate. They said CCI is right, pay 1,000 crores and change your ways. Then they're going to Supreme Court. So they're gonna exhaust all the options, and then only then they will obviously change their ways. That's the way to go. Who makes money? We've discussed about this, right? In these situations, who makes money? You remember? We've talked a lot about this. When everything is fugazi, who makes money? Lawyers make money. Mr. Tarun, you're right. You're right. CCI to not probe. So that's the closest matter says ADI has no supporting evidence for its claim of anti-competitive practice on online advertising. Similar suits were laid on Google in Europe. They lost, I guess. Also in US. So the biggest suit against Google in this anti-competitive, search play was a case by Yelp. So Yelp was the restaurant reviewing company, and Google essentially started doing that, and Yelp had a very big case against Google, and it went it became a very high profile case. So nothing like that is going to happen in India though. uh, markets have fallen a bit, 1%, because of whatever's happening. Nobody should be surprised. Central banks are building a haven of bullion assets, that is gold. Central banks are buying gold. We're not surprised. Since past 3 years, they've been adding gold. Not that much, but they're still buying a lot of gold. Gold prices are up. Gold is not selling. The retailers are not being able to sell gold. Government essentially to not make it a big problem as far as the festive season is considered. You know what the government did, right? It went for the hallmarking of 9 carat gold so that people could buy. Because when central banks are adding it up, gold prices go up, it becomes a little bit of out of reach for consumers. And which business picks up pace when this happens? The gold lending business, right? The Muthoot Finance type of people. So that's that. Moving on. And that's pretty much it. That's pretty much it. Frauds on the rise with modes more ingenious, says Mr. Pandey. He's the chief of SEBI right now, chairman. Highlights misuse of preferential allotments, fudging of documents which go against retail investors. So he said that there's a lot of problem as far as these stock market frauds are considered. He didn't talk about how companies are inflating their valuations by very weird ways. He didn't talk about that. Otherwise, it would have been like SEBI also reads or watches thinkers frequency, right? But they don't. They're talking about how they can combat with these intelligent, ingenious ways of defrauding retail investors. One of them is buying shares through related entities. So what they say is when an IPO is happening, the institutions which are buying their shares, they are related entities. So they buy it up, bring up the market, and then dump it on retail investors, and retail investors crash, and so on and so forth. Not surprised. Speaking of crashes, Mr. Anil Ambani is facing a lookout circular. You know, that SBI transaction he did, the bad loan. So the case against Mr. Ambani is two found, right? One is the kickbacks with Yes Bank, Mr. Rana Kapoor case that we've discussed a lot. And then there's also the case where he faked a bank guarantee, where Reliance faked a bank guarantee, the group. Now, bank guarantee is a document that you've got to hand over. Now, that document was given by a company which essentially issued fake bank guarantees. And the problem is that the directors of that particular company were previous directors of Reliance. So this is an open and shut case, right? This has been an open and shut case for a long time. But I was expecting it to be settled by now. They might just pay some damages or whatever. But it's really kicking in. And it's not going away for Mr. Anil Ambani. So while the group had some good news to share, like a 6,000 crore fundraise, and so on and so forth, it was looking that it was going well. ED has come back to bite his rear, and you never know this one where it goes. So this particular deal, they'll have to shield Mr. Anil Ambani himself. So the Reliance contention is that we didn't know that company was scamming or faking bank guarantees. So we have ourselves been scammed, duped by that particular company which faked the bank guarantee. But that obviously is not flying with the tax authorities and the ED guys. So let's see what happens there. And with that, we have to come to the end of the 69th episode. 69th. I was really going to miss this one because I wasn't feeling that well and it was a lot of trouble. But I'm glad I did it. Hard thing. It was a hard thing. But I'm glad I did it. Wouldn't have liked missing 69. Episode 69, I mean. Mr. Tarun, Mr. Rajveer, Mr. Raju, Kumar, Mr. Jindal, thank you so much. This brings us to the end of the 69th episode. Yeah. Thank you, Mr. Kumar. Mr. Sunmeet Singh Sethi asks, what are your income streams? Well, that's a personal question. I have a startup. You can go to my LinkedIn profile to check out my income streams. How do you manage your money? I mostly am stock heavy. I am stock heavy, so I like playing around with stocks. So that's how I manage it. No debt, no low risk investments for me. I'm a very high risk appetite guy. So that's that. Daily mental workout, daily dose of insights and analysis which don't lead to paralysis right before we punch in. Uh, I wish you all a beautiful day, personally and professionally. I hope to see you tomorrow, same place, same time. Thank you so much, everybody. Bye bye. Thank you so much, Mr. Raju.